So the KOSPI is up today, but if you look under the hood, you're going to spot a massive paradox. Net buying, it's almost entirely vanished. Let's dive right into this explainer and break down exactly what's happening beneath the surface. The Korean market closed in the green today, pushing the index up 0.73% to 6,345. You know, on the surface, it really just looks like a perfectly solid, quiet session. But beneath that surface gain lies a total anomaly. Take a look at the absolute net buying size. It completely collapsed. We're talking across the board here. Foreign, institutional, and retail net buying plummeted by over 90% compared to yesterday. The flows just ground to a sudden halt. Foreign investors went from offloading nearly 1.5 trillion won yesterday to buying a pretty meager 45 billion today. Institutional buying totally dried up, and retail investors flipped entirely to selling. So what on earth is actually going on here? Section 5, Macro Pressures and Yields, the discount rate vice. To understand this bizarre halt in buying, we have to look globally. With negotiations in the Strait of Hormuz stalling out, oil supply constraints are effectively locked in. This is pushing WTI crude up past $83, keeping a seriously heavy weight on the entire global system. And as you'd expect, those rising energy costs fuel inflation fears, which immediately drives up Treasury yields. Both the US and Korean 10-year yields jumped by 6.2 basis points. For stocks, this is obviously bad news. It heavily increases the discount rate applied to corporate cash flows, which inevitably pressures stock prices downward. Section 8, Semiconductor Export Boom, the Micro Catalyst. But pushing back against that heavy macroeconomic pressure, we've got an incredible microeconomic bright spot. Early August customs data just dropped, and honestly, the numbers are staggering. We witnessed a 15.5% year-on-year surge in semiconductor shipments. That's an absolute record high for this period. Tech exports are booming, hitting nearly $10 billion, which makes up almost 47% of all Korean exports right now. With global demand remaining aggressively strong, the fundamental case for buying semiconductor stocks has rarely looked better. Section 11, the hidden liquidity rotation, resolving the volume paradox. This brings us to a critical contradiction. How do we reconcile a historically strong tech sector with a 90% drop in market net buying? Well, the answer lies in total trading value. Trading didn't actually stop today. Over 21 trillion won changed hands. But look at this allocation. A massive 41% of that total volume was concentrated entirely in a single stock, Samsung Electronics. So that 90% drop in net buying, it was really just an illusion. It was hidden by violent, offsetting portfolio reallocations. The volume was heavily present, but the buys and sells essentially canceled each other out at the macro level. Here is exactly how that rotation played out on the ground. Foreign capital absolutely rushed into Samsung Electronics, with net purchases for the single stock rocketing past 584 billion won. But at the exact same time, those same foreign investors violently sold off its chief rival. They dumped nearly 300 billion won of SK Hynix, marking 4 consecutive days of aggressive selling. This rapid offsetting flow, buying Samsung while dumping SK Hynix, completely masked the underlying liquidity rotation taking place right beneath the index level. It's a perfect reminder that you can never just look at top-line net numbers and call it a day. Section 17, Apple's supply chain risks, the CXMT factor. So why this specific rotation today? The dynamic is complex, and it ties directly into a fresh wave of rumors circulating about the Apple supply chain. New reports suggest Apple is considering Chinese manufacturer CXMT for its DRAM supply. This introduces a serious volume shift risk, directly threatening the shipment volume and revenue of Apple's existing legacy suppliers. And here is where it gets highly counterintuitive. Samsung Electronics actually holds greater exposure to this Apple supply risk than SK Hynix does. Yet, despite being much more exposed to the danger, Samsung was the primary target for foreign buying today. Make it make sense, right? Well, this dynamic led to a massive ownership transfer. Retail investors dumped 638 billion won in Samsung shares. And who was right there to scoop them up? Foreign and institutional investors, who bought 660 billion won. It was a near-perfect offset as the asset simply changed hands. The big takeaway here is pretty clear. That massive drop in net buying wasn't a market slowdown. It was an illusion hiding one of the most aggressive daily portfolio reallocations we've seen in a while. Capital is rotating incredibly fast, and as an investor, you've got to watch the underlying volume, not just the net flow. Think about it. If institutional capital is willing to violently rotate into a stock that carries more direct supply chain risk, you have to ask yourself, what do they know about Samsung's next move that the retail market doesn't? Keep an eye on those underlying flows. If you'd like to stay ahead of these hidden market rotations and receive news on the closing of Asian stock markets before the New York bell rings, make sure to hit that subscribe button. We'll catch you in the next explainer.